Testing 1 2 3. Can you guys hear me? If you guys can hear me and see my screen clearly, please type it in the chat below. Alright, so that I know everything is working well. Hello, nice to see you again. Yep, so please type it in the chat below if you guys can hear me and see me clearly. Alright. Alright, that's great. Okay, cool. Maybe let's wait for 2 more minutes before we begin the session. Alright, so we want to wait for the rest of the attendees to come in before we begin the session. Alright, so let's wait a couple of minutes. Okay. Good day to you too, everybody. Okay, we will wait for 1 more minute before we begin the session, alright? Because I don't want to delay the session also. Okay, so wait for 1 more minute before we begin the session. Hello, good day to you too. Yeah, 1 sec. Oh, today we'll be going through an educational webinar, which is swing trading. So, yes, trading mask. Today is not a live trading session. Yeah, but we'll be going through swing trading. Let me see if I can use swing trading on these pairs that you requested for, alright? So let me show you some examples towards the end, how you can use swing trading to do for pairs such as US 100, gold, silver, and oil. Alright? Okay, so let's begin the session. Welcome back to another IC Markets Global webinar. Alright, today we'll be going through a session which is build your trading strategy, swing trading with myself. Alright. Okay, so before I begin the webinar, remember that everything in this webinar is educational in nature and nothing should be construed as investment or trading advice. Alright, so please remember to do your own due diligence before you guys trade. Okay, so the agenda for today, we will go through which time frame should you use for swing trading. Alright, then the next thing is graphical key elements on the charts. Alright, and then the third thing is identifying the momentum. Fourth, breakouts versus reversals. Fifth, using correlation to fine-tune your swing trading strategy. And lastly, putting it into practice. Alright, so bear with me for a bit. We will go through all the agenda from 1 to 5, which is more of the slides, and then the last part, which is part 6, we will go into trading view to show you guys how you can actually use this swing trading strategy for any pair. Alright, so I'm your host for today. My name is Boon Hong, and I'll be going through review today's topic on swing trading. Okay, so which time frame should you use for swing trading? Okay, so the time frame that people usually use will be weekly, daily, H4 and H1. Okay, so weekly is usually for weekly buyers, right? Basically we are looking for trends in the markets. Alright, and then for daily is to mark out your daily key levels, and then H4 is for your entries. Alright, and then H1 if you want to refine your entries. Okay, I think it's pretty straightforward. Okay, so these are what we call graphical key elements. So graphical key elements, simply put, is basically your horizontal levels, like your support and resistance levels. Alright, you can see right here we have a very nice support level. Okay, right here we have 2 points where it touched. Okay, and this is our overlap support level. Okay, then we also have our first support level, which is a overlap support level as well. And then we have our first resistance, which is a overlap resistance level. And then we have our second resistance, which is a swing high resistance level. Okay, so the next thing is identifying of momentum. Okay, so basically the momentum indicator identifies when the price is moving upward or downward and how strongly it moves. Okay, so momentum measures the rate of change in prices to the actual price changes themselves. Okay, simply put, momentum is measured by continually taking price differences for a fixed time period. So you can see right here, you can see how price is moving in a downward trend. Okay, so momentum value below 0 indicates that price is moving down, while a momentum value above 0 indicates that the price is moving up. So in this case, you can see that price is the momentum value is below 0, and it shows that price is moving down, which in this case is correct. Okay, so your direction should mainly be sales. Alright, so for momentum indicators, what we can use is MACD. So MACD basically uses 3 exponential moving averages to identify price movements. So the difference between these averages is shown in a histogram, which we will see later on in the next slide. Okay, so the movement can show whether a trend is strengthening or weakening. But moving averages always lag behind price action, so you cannot use MACD as a standalone momentum indicator. Alright, you will have to use it with your horizontal key levels as well as other confluences such as your Fibonacci. Alright, so this is more suitable for identifying your entry points. Okay, so now how can we interpret the MACD? Okay, so looking at this MACD line over here, which is the blue color line, then the signal line over here. Alright, then this is the MACD histogram. So the signal line, when the MACD crosses below the signal line, it means that we are looking for sales. Okay, later I'll show you guys more examples. Alright, then for the MACD histogram, okay, the stronger, you can see right here, the stronger the bars are, right, you can see there are so many red bars over here, the stronger the sell opportunity. Okay, then for zero line, I would say just ignore it, because I usually don't really pay attention to the zero line, right? More so, you should pay attention to the MACD line, signal line, as well as the MACD histogram. Okay, so selling signal, MACD crosses below the signal line. Okay, so when it crosses below this signal line, we are looking for sells. Alright, and then you can see right here we have the red histogram to also see if it all lines up together. Red histogram and MACD crosses below the signal line means we are looking for sells. Alright, so the next thing is MACD trading strategies. Okay, so what about buy entries? Buy entries meaning the blue line crosses over the orange line. Okay, so MACD line, which is the blue line, crosses over the signal line, which is the orange line. Okay, then we are looking at the histogram as well. We can see that it's green, right? All these green bars means we are looking for buys. So you can see right here we have 1, 2, 3, 4, 5, 6 entries as well. Okay, but not every entry will be the best, right? You can see right here, even though the MACD line has crossed over the signal line, but we have a weak histogram. Okay, so once we see that we have a weak histogram right here, right, and it doesn't make sense to actually just buy over here, because you're buying in the middle of nowhere, right? And then you can see how price actually go up for a bit and then comes down afterwards. Okay, so you definitely have to use other confluences, right, instead of just MACD itself. Okay, so this is your sell entry. Your sell entry, right, you can see how the MACD line crosses below the signal line, but we have a very weak red color histogram, right? That's why price consolidated for a bit and couldn't go down, right? But right here we have a very steep, you can see right here we have a very steep slope, right? The MACD line crosses below the signal line, and then we have a strong red color histogram, right? That's why price actually went down from here, same as this area. Okay, so these are all sell opportunities in the market. Okay, so other momentum indicators that you might ask will be RSI as well as stochastic oscillator. Alright, okay, so I'm sure most of you would know RSI, right? So basically, when the RSI value is above 70, suggests that it is overvalued and there might be a price correction, indicating a sell signal. So what this means, basically, simply put, is overbought and you're looking for sell opportunities. Alright, when the RSI value is below 30, it suggests that it may be undervalued, meaning oversold, and price might actually rebound, indicating a buy signal. Okay, so the next thing is stochastic oscillator, right? I find that stochastic oscillator works very well for stocks, but may not work as well as for forex, etc. Alright, so just be careful for that. RSI is still okay. RSI works well with gold, works well with euro dollar, pound dollar, right? Okay, so stochastic oscillator, readings above 80 indicates that price is near its height, so we are looking for sells, right? Readings below 20 indicate that prices are near the lows, indicating that we should buy, right? Okay, so these two we should ignore because it's repetitive. Okay. Alright, the next thing is hidden support and resistance levels. Alright, you can see right here, right? When it's at its high, the stochastic oscillator shows that it has a value of 93.52, right? Remember, when it's above 80, indicates that price is near its high and we are looking for sells. Okay, so going back to this, that's why we have a sell opportunity over here. Then the same thing happened over again, right? You can see what this is the second time it happened, third time it happened, and fourth time that it happened, right? Same level, 93.52, and the same when it aligns very nicely, right? It actually sold off from here. Okay, so this makes sense, and a lot of people actually don't know that this is what we call hidden support and resistance level. Alright, so this is something that you can take note of. Alright, very useful for swing trading actually. Okay, so this is your support, right? You can see stochastic, we are below the 20 level, actually very low. We are at the 4.2 level, right? So whenever price is at this level over here, right? 1, 2, 3, 4. You can see every time when price reaches this level, right, we have a bounce upwards. Every time price reaches this level, we have a bounce upwards. Same for here, same for here, right? That's why we have a buy entry. And not only we have the hidden support, we are aligning it together with a ascending trend line, right? Bullish ascending trend line, right? That's why we are very confident for this buy entry. Alright, so when you have multiple confluences acting together, right, this is where you will be confident and to enter the trade, right? Okay, so that's why from here we can see once price hit the 4.2675, which is our hidden support level, we can see how price actually bounce up from here and rise up all the way to our take profit level. Alright. Okay, so bearish divergence example, the next thing that we can use for swing trading. I realized that divergence is very effective on the higher time frame, right? Such as your H4 or daily, right? If you see on daily or H4 levels, just take the trade, right? Most of the time, what I noticed is that when you have divergence on H4 or even daily, right? Most of the time, right? It's not 100%, but most of the time we can see price moving in a direction that that you want it to, right? Okay, so firstly, what we can see is price testing a key horizontal resistance level with price making a smaller high, right, resulting in bearish divergence with RSI. Okay, our descending resistance line right here, right, meaning that we can see a slight descending resistance line on RSI caught the past two reversals correctly, so it actually forecast that we could be seeing a reversal over here. Alright, important, this is a bearish divergence. Alright, so you need to know the difference between bearish divergence and bullish divergence, right? You will be able to see the chart of bearish divergence and bullish divergence, right? There are a lot of different ways that you can see. There are also hidden divergence as well, right? So you can do your own research, right? There are very short YouTube videos on how you can learn more about divergence, right? I know people that actually use divergence on a daily basis, right? It is more, but for me, I would rather use it as a extra confluence. I wouldn't use it as a main strategy itself. Alright, okay, then we can see right here in this example, price actually reverses strongly because of our horizontal resistance plus RSI resistance as well as our bearish divergence. Okay, we can also see that RSI has also reversed very strongly from here. Okay, so this aligns very well. Alright, so once you spot this bearish divergence on the higher time frame, you will be able to see a very strong reversal happening from here, especially when we have all three confluences acting together: horizontal resistance, RSI resistance, and bearish divergence. Right, once you have these three confluences acting together, price will most likely go in the direction that you want it to, which is a bearish reversal. Okay, just take a moment to actually absorb all this, right? If you have any questions along the way, please make sure to type it in the chat below so that I can attend to your questions, right? I don't want you guys to be lost halfway and, you know, not being able to understand any of it. All right. Okay, so for bearish divergence, example number 2, we can see right here we have a higher high, while stochastic shows we have a higher low. Okay, we can see right here we have a stochastic level of 94, and price is actually rising towards this level of 94.98. Right, remember what we recalled. If it's above 80, right, what we are looking for is a sell. Okay, so right here we also have bearish divergence on the chart itself. So what can we see? We can see how price actually have a repeated pattern. So this is what we call hidden resistance level. Okay, so hidden resistance level, then we have bearish divergence as well. So what we are expecting a strong sell off from this level. Okay, that's why we can see how price actually reverses off this bearish divergence and this hidden resistance level. I think once you get used to it, you'll be accustomed to this strategy. All right, and then you will be able to spot it pretty easily. Right, for myself, when I was trying to spot divergence as well as hidden resistance or support levels, sometimes it'll take a while before you will be able to spot it. But after a while, it'll be pretty easy to spot all these patterns. Alright, so divergence potential. Always take note of where the bearish divergence started, as this is the level where it would tend to reverse to. Okay, so this is the part where it actually started. Right, then we have a bearish divergence over here, all the way to this high. So what this means is that price might actually fall to this level over here. Right, if you mark out this level, horizontal level where it started, right, what this means is that price would actually fall to this area. So bearish divergence equals price is making higher highs, you can see, while RSI is making lower highs. Okay, and then we can see right here in this example, price actually reversed to where the divergence started. Alright, then from here we can see the rebound all the way up here as well. Alright, so just this is just extra knowledge, right? So price will actually tend to fall from the higher high all the way to where the divergence started. Okay, so just take note of that. Alright, so how can you actually forecast breakouts? Alright, the first thing is noticing that RSI broke the ascending support line before the price on the chart did. So this forecast that price might break this ascending line. Alright, so second, looking at this, price is barely breaking out of the ascending support line, but shows strong recent bearish divergence versus RSI. So once you mark out this very strong ascending support line, you can see that RSI has really broken it. So what can we look for? We can anticipate that price will actually break through this ascending support trend line. Okay, then the third thing is RSI breakout plus bearish divergence plus price breaking out equals high probability of price reversing off this and breaking out of this ascending trend line. Alright, so right here in this example, we can see price broke and dropped strongly. Right, then you can look at RSI as well. RSI did the same movement. Right, so we have bearish divergence, RSI breaking out earlier, right, and then price broke and dropped strongly. Okay, then the next example is a bullish example, right? RSI breaking out of descending trend line, right? Then price is now price on the actual chart is now testing the descending resistance line, and we're wondering if it would actually break out of this descending trend line. All right, then we have bullish divergence. We have RSI forecasting earlier. All right, and then we have bullish divergence. Oh, sorry, we have bullish divergence, RSI breakout, and then what we are anticipating is for price to actually break past this descending resistance line. Okay, then we have a successful breakout of descending resistance line as forecasted by the RSI. So usually RSI will forecast earlier, right? Sometimes, okay, then you can use it as a indicator followed by bullish divergence, and you can anticipate price breaking out of this descending resistance line. All right. Okay. All right, let's move on. Okay, so breakouts versus reversals, right? So breakouts are usually defined as price breaking through a support or resistance zone in a continuation move, right? Basically moving in a trend direction as price makes a new high or new low. All right. Whereas reversal trades are usually pullbacks in price with traders catching the turn. So basically, where the pullback ends and price resumes the trend. All right. So this is a example of breakouts, right? You can see right here, this is a resistance line that price has struggled to break through, right? Price actually broke through this area of resistance, right? Whereas reversal, right, we have a slight pullback of this descending trend line, all right, and then we are anticipating price to break through this trend line. Okay, so using correlation to actually fine-tune your strategy, right? How can you use correlation? So from this example, you can see DXY versus gold. All right, you can see let me see, yeah, we have actually a negative correlation between DXY and gold. Okay, but sometimes you have to realize, right, where there are important news events, right, sometimes gold will move in the same direction as DXY. So this is something that you will have to remember, right? Not all the time that price would actually move in the same direction not all the time that price of gold will move in the same direction as DXY, but most of the time, right, we will see a negative correlation, right? So if, for example, this orange line is DXY, okay, so we can see how DXY is moving up, right? Then we have a negative correlation, meaning gold will go in the opposite direction, which is going down. All right. Okay, so the next thing is, how do you actually identify swing highs and swing lows? Okay, so insignificant swings, all right, movements are too small, no significant swing highs or swing lows. So you can see right here, these swing highs or swing lows are too insignificant, right? You can see they are actually very small, right? They are not easy to spot, right? It doesn't come clear to you that, oh, this is a very defined swing high or swing low, right? So these are bad to use for Fibonacci points. All right, so what are significant swings? Significant swing highs move up and down clearly, right? We have obvious peaks and troughs, and then we have clear market movement. So swing highs or lows need to be significant enough, right? And it's very, very easy to spot all these significant swings. Okay, so the next thing is following of market structure. So this is the wrong way of following market structure, right? We can see that marking the swing low all the way to the swing high right here, right? Price is cutting through the Fibo trend line, is cutting through price structure over here. So this is a example of a wrong way of following market structure. Okay, so this is the correct way of following market structure, right? We are marking out the swing high all the way to the swing low. All right, then we can see proper market structure, right? We can see how price will actually react to either any of these Fibo levels over here, such as the 50% Fibo level or 61.8% level. Okay, so let me show you guys example. Let's put it into practice. Let me show you guys what I would do for a swing trading strategy. All right. Okay, let me see. Let's use I think let's use GBP USD. Okay, wow, GBP USD is actually recovering pretty well. Okay, so let me show you guys an example. Okay, where is my okay, let me show you guys. Okay, so this is the RSI and this is the stochastic. All right, so let me show you guys an example. Okay, so the first example is basically, let me see, let me try to spot this. Let me see if I can find it on the okay, so let me just mark this out. Okay, this level over here, this is our hidden support. All right, then we have this, you can't really see it clearly, right, but this is a level where it's lower. This is lower than this point. All right, then we have bullish divergence. Okay, so we have bullish divergence over here, plus we have hidden support for our stochastic. Alright, so once and we are on the H4 time frame. Alright, so do note that we are on the H4 time frame. Okay, so we are on H4. Let me just type it out. I think it's easier to type out. Okay. Higher time frame, bullish divergence, and then hidden support, stochastic. Okay, so once we have all three, alright, once we have all three, you can see how price actually bounce off from here, and then if you were to take a trade, right, how will you take the trade? You will enter based off here, and then your stop loss referencing this low over here. Alright, this support, because essentially this is our second support, and this is our first support. Alright, then where should we target? Our first target is, our first obstacle would have been this, right? Our first obstacle would have been this, and our next obstacle is here. Okay, so this is what I am actually looking at, right? If I were to use a replay button right here, okay, the replay button is very useful. Right, you can see we have a low created here. Okay, then we have a higher low. Once we have a higher low and then a lower low on GBP USD, we have a bullish divergence. Okay, so right here is where we have our first obstacle. First obstacle meaning whether price would break out of this level or not. Right, so once it actually broke out of this level, right, let's see, right, once price actually closed above, right, what can we look for next? We are targeting this level over here. Okay, so this is what we are looking for hidden divergence, hidden support level or hidden resistance, as well as bullish divergence. Okay, and then it works well as on the H4 or daily time frame as compared to H1 time frame. Right, basically for swing trading we are only using weekly for directional bias, and then daily to mark out your horizontal key levels, and then H4 or H1 for your entries. Right, so yeah, this is the first strategy. And then let me just clear all of this because it might look a bit messy. Alright, then the next thing is how we can use FIBO as well as fair value gaps for swing trading. Let me show you guys. Okay, so right here on the daily chart, we can see very clearly for USD JPY that price is now, we have a correction towards the downside, right? Previously we have a uptrend, right? But price is actually correcting towards the downside, at least to this level over here, right? Because we have a clear break of this low, meaning that price will continue lower to target this low over here. That's why we have such a strong movement. So firstly, what we are already targeting is daily bias, bearish. Okay, then the next thing is we'll go to H4. Alright, so on H4, what can we look for? Oh, where's my text? Okay, so on H4, we have a clear break of structure over here. Right, let me mark this out as bearish arrow. Okay, so price has took out this low over here. Alright, so we are looking for sells. Okay, when we are looking for sells, this is the last high. Alright, once price broke this low, once price broke past this is our break of structure. Alright, so we are looking from this high to this low to mark out our FIBO level. Alright, okay, then at this level we have our fair value gap. Okay, see, you can see how price actually reacted to the 61.8% FIBO retracement level because let me just type it here. First one is this, second one third. Okay, so firstly we have the daily bias, which is bearish. Second, we have proper break of structure, right? And price has been breaking structure all the way, so we don't have to worry about that. This is continuous break of structure. Okay, then the next thing is identifying of fair value gap, right? Then the next thing is FIBO within FVG. Ideally, what we want to see is 61.8% or 71%, right? Usually for me, I usually use the 71%, but in this case, I realize price actually reacted off this 61.8% FIBO retracement level, so we can use this. And then how you should target. Alright, then you are targeting this low over here, right? Don't be greedy, right? Once price actually, you can see how price took out this low, right? Then went all the way back up to our entry, right? So for sells, we should target the next lower low, right? Which is this low, right? Because if you are greedy and you are targeting, let's say you are referencing all the way here to this low, even though price eventually came to tap this low over here, right? If you are patient enough, that's good, I guess. But realistically speaking, you shouldn't be targeting that far, right? Even though you have a better risk to reward ratio, but you can see how price actually went all the way back up to your entry before it came all the way down, right? So you would have been either in break even or hit your stop loss, right? But in this case, luckily for those that, let's say, put their take profit all the way at the lows over here, right? They will have hit their take profit without hitting stop loss. Okay, so just be careful of where your take profit target should be. So mainly for myself, I use this strategy all the way, just 4 very simple steps: identifying of your daily bias, break of structure, fair value gap, and then Fibo retracement levels within your fair value gap. Just these 4 simple steps will have been able to achieve a slightly decent win rate of about 65 to 70% win rate, right? Usually the risk to reward ratio is about 1:1.5 or 1:2.5, right? It ranges about there. And then you will only have to hold your trade for about, let's see, how long did this take? It took about 1 day, 16 hours, close to 2 days. We'll just take it as 2 days, right? So 2 days to achieve, how many pips is this? 370 pips, right? Some people might put their stop loss here, right, to achieve a better risk to reward ratio, right? You could, but my suggestion is that if you want to have a set and forget strategy, just put it above this swing high over here, the last swing high, right? If you are very confident that price wouldn't go out of this Fibo retracement level, then you can put it slightly above the fair value gap. Alright, so pretty simple. Yeah, so just take a moment to digest this strategy, right? It might seem like it's a lot to take in, but honestly, once you practice long enough, right, just take a screenshot of these 4 simple steps, right? Once you are able to understand this strategy very well, you can use it for actually all the pairs, even crypto. Crypto, I would suggest to use it only for BTC USD, right? Then you can use it for the majors like euro dollar, pound dollar. My suggestion is to use this strategy okay, AUD USD, right? You might be surprised, but AUD USD works very well. USD JPY, gold, and then we have, what do you call that? GBP JPY. Yep. These oh yes, and GBP USD, right? These are the pairs that work well with this strategy. Okay. Very, very simple stuff. Okay, so if you guys have any questions, please ask regarding this strategy, because I believe that sometimes you might have different questions on how a strategy might work, right? Like what should you look out for, etc., etc., right? Okay. Let's see. Check. Suppose its value of RSI is 50, then is bearish. Okay, let me show you an example. Okay, not necessarily, right? If I were to, okay, let me just clear this. Right, this is the RSI. Okay, so usually for RSI, what we are looking at is 70 and 30. All right. So the benchmark is this level over here, right? 50. So if it's 50, generally you wouldn't want to trade, right? If it's close to 50, generally you wouldn't want to trade, right? Because 50 meaning that it's consolidating, right? It doesn't mean that it's overbought or oversold, right? But sometimes, right, RJ, you might be right, because you can see some people would use this method like the RSI crossover, something like that, right? So meaning, let's see, right? If I were to use H1, okay, right? If I were to use H1, you can see right here. Okay, this is our resistance. Alright, and then the value right here where it reacted, let me mark out. Right, this value over here is slightly below 50. Right, so so long as it's below 50, right, is bearish, right? You can sell, right? But make sure you are aligning it together with your resistance levels, right? So if you align it together with your resistance levels, right, and then you mark out your FIB, right, 38.2, right, somewhere along this level over here. Okay, so long as you see we have FIBO, we have a downtrend, we have a resistance level, and then RSI is below 50, generally you can look for sales, right? In which this case, the sales actually work out well, okay? But you have to be careful, always calculate if it's worth the sales or not, right? Because if you were to look for sales, you will have to put your stop loss above this high, and then maybe your target is about here, about here. Okay, so almost hit your take profit, right? Or if you want to standardize, aiming for 1:2, you would have definitely hit your take profit, right? But if you aim for all the way here, 1:2.17, right? I would suggest to aim for the body of the candle, right? Because sometimes if you aim at the wick of the candle, right, you wouldn't be able to hit your TP, and then price will start to reverse all the way back up to your entry. Okay, so I hope that answers your question. Okay, so I think that's about it for today's session. I think swing trading is a very swing trading to me is easier as compared to scalping, right? Because swing trading, you can set and forget, right? You wouldn't have to worry so much about how you should, how the candles are going to close, right? You are just leaving it to run, and then just by following a few different confluences, right? Making sure that you have all these rules set in place, and then you'll be fine, right? Okay. Alright, thank you for joining in today's session together with me. Right, so stay safe and trade safe. I shall see you guys in the next session. Alright, thank you. Bye bye.